What is up, YouTube? Welcome back to the Stacks by the Numbers, and today I wanted to do just another quick installment of my series of how do I do Let's Review, where we go back, we have the guts to hold my feet to the fire and see if I actually made a decent call, if I have no idea what I'm talking about, if I left information out, or if we perhaps overanalyzed the situation and kind of talked ourselves in or out of it when we shouldn't have. And of course, we take those experiences and we apply it to future analysis and future investments, because anyone who doesn't learn from their mistakes is a fool. That's why mistakes are often looked at as improvement speed bumps, if you will. A little speed bump in the short term that will eventually lead to a long-term improvement, because we'll always recall the mistake that we made, the problems we ran into, the way we reacted incorrectly or correctly, and then we'll obviously have a better understanding moving forward and make better decisions down the road. So, name of the company in question that I wanted to go back to here, Rivian Automotive, ticker symbol RIVN, listed here on the NASDAQ, stock 1487, down 27 cents on the day, a little over 1.75%. And as we see here, just a couple of points off the 52-week low, because, in my opinion, from day one, the company was significantly overvalued. Now, right here, coming out of this downward channel, June 28th is where I made the video. As you can see, stock was about $27.5, $28 a share. Of course, I said it was overvalued. We pulled back for a few days, and then, of course, we just have a massive rally for no reason up to north of 40, and then you see it slowly begin to pull back and then really break down, and as you see here, hit a low of 1168. So basically, you know, if you were in it for the long haul, which I always recommend, again, in my opinion, to do long-term investments, not short-term trades if you don't have to, because, again, we knew it was overvalued here at $27.28, and they immediately ran it all the way up to $40. So if you stepped in here at 27 and you were like, oh, yeah, you know, in 2-3 months it's going to be down at, you know, $20 or whatever, you know, again, you would have bought these puts long-term out. Well, not really long, short-term out, you know, a couple of months, you would have bought, you know, $20 puts or something for very cheap, right? Because you have little liquidity, and then what happens? Not only do they not bring the stock down or keep it flat, they actually run it up. So now you're sitting there, look, with like a 20, a 21 put, yet a month and a half after you made your initial investment, the stock is up north of 40. And chances are your put that is now 50% lower than where the stock is currently trading at is probably worth pennies, if that. So that's why I always say, try to buy for the long term if you can, not the short term. And when it comes to options, if you do have the liquidity, the time always trumps strike price, right? Because in the short term here, you could have only had a couple of bucks and said, oh, you know, I want to try to time, you know, it's at 27, 28. I want to try to time a pullback to 24. However, if you were able to buy, you know, 1 year out, again, it's been about 11 months since we looked at this stock. It was June 28th, right? So exactly 11 months ago, pretty much. And again, imagine at 28, 27 and a half, you were able to say, okay, 1 year from now, I'm going to buy like a 14 put or a 13 put, right? So that would be like here, September, first week of September, right after earnings, right? And let's say right here, you have a 14 put, let's just say. As you can see here, that is right where the stock is now, and of course broke down into 13, 12, and even hit new 52-week lows down at 1168. So here, even here, if you miss the bottom, you are still, basically you're in the money or near the money. However, the option is up significantly, of course, because you called over all these months that the stock was going to pull back, you know what, 40%, almost 50% from where it currently was trading. And that's why when it really begins to take these drops here and head in that direction, that's what I mean, like a situation like this. Now you're turning around. Look, this is mid-January. The stock was down to, you know, high 15s. And if you bought like a 14, 15 put all the way out till September, I mean, you know, you still have 9 months left on the contract, but the stock is basically trading at your strike price and is approaching in the money with 9 months left on the that's what I mean. Like you would have made great profits hand over fist. And that's why I always try to tell you guys, either try to buy long-term options, or if you do have the liquidity, just go with the shares, because you are better off. Remember, at the end of the day, it's all about being correct. It's not about trying to time something perfectly and make astronomical returns. Oh, I made 1,200% return today. Hey, listen, that is beautiful. And when it happens, congratulations. I really hope it happens every day. But there's a problem. It doesn't happen every day. And the problem is, we see a little bit of success like that. We see the big pops. Oh, I called the puts on QQQ today. They began to free fall. The NASDAQ began to free fall. The puts began to print. All of a sudden, I'm up like 250, 300%. Yeah, that's phenomenal. And then what happens? Because you had so much success with it today, you are now looking for it tomorrow and the next day and the next day. And before you know it, not only did you just make multiple calls incorrectly in a row now, because of course you're gambling, you're no longer investing, but now you've given back all the initial wins that you made on day one. So that's why, like I always say, take what the market gives you. Try not to force trades. But again, simple logic and common sense sometimes will lead you in the right direction. And if you did buy long-term puts, again, like a year out from where we said, year and a half out, not only would you have ended up being right here, but of course, as the stock began to run up, you would have known that the stock is going to come down. So here at 40, you could have rebought puts a year out at 30, or you could have added to your initial puts down at 14, 15, 18, whatever the hell your strike was. And of course, as it began to pull back, you would have done significantly well for yourself. However, we could look at the numbers again in a minute, but I just wanted to go over this chart because, again, this is from inception. And as we see here, we're dropping down into this downward channel. And right here when we broke out, June 28th, this red candle is where I made the video. And as you see here, we bounced and hit a little bit of a bottom and then bounced off this trend line and kind of just stayed above it for a while, for several months. So I drew out that bottom trend line. And then, of course, we broke and slowly began to drop down. And it's interesting how this happens, right? Because this is how, in my opinion, you can almost tell a company's overvalued, because it pops up here really for no reason, and then it continues to sell off here, just consistently decreasing, not holding that value that it regained for no reason. And then, boom, you have a massive drop here. And then you'll always have a slight short-term little rally back up, and then, boom, you have a sharp decrease again. There's your slight rally. Boom, you have a decrease. And even if you follow it, right, boom, decrease. And now you're running back up. So now this is interesting because this is basically our neckline here. And in my opinion, it does look like we have an inverted head and shoulders forming going back to early March. As you can see, our first shoulder, our head, our second shoulder. So technically, this, if it does close, it says, I think it's like on the 4-hour, if you look at the 4-hour chart, and it has a close above the neckline, then it's bullish, and that's the breakout. So hypothetically, if this is lining up for an inverted head and shoulders, maybe you have a nice pop here back into like the low 18s, which of course anyone holding the stock in the short term or looking for the breakout, or who have also noticed this pattern here going back a couple of months, obviously you're setting yourself up. And if this does happen, then congratulations. I hope everyone makes a lot of money in the short term. However, if we look at the numbers here, even though the revenue has been starting to come in finally, you can see it's been light. It's been light. 3 quarters in a row. Going back here, they beat earnings. However, I'm talking about, obviously, revenue. Somehow on the EPS side, that's also blowing my mind. Somehow you're reporting less revenue and less business than analysts expected, yet somehow you're losing less money than analysts expected, even though if we look at the balance sheet, which we will in a second, looks absolutely atrocious in my opinion. But again, inverted head and shoulders here in the short term. You have a pop up to 18. Fantastic. Congratulations. Hope everyone makes money. However, even if it does do that, it will most likely pull back and get back into this long-term descending wedge here that we've been in, this little downward channel. And you can see it will most likely bounce around, in my opinion, and that'll bring us to August 18th estimates of next quarter's earnings. And as you can see here, look at the revenue, $955 million, right? So now we're talking big bucks. We're estimating almost $1 billion for the quarter, and the company was just doing, $300 million, $600 million, boom. Now you have a jump up to over $950 million. So that's why I kind of drew this apex circle here with our green arrow, because in my opinion, first of all, according to the chart, if it breaks out and begins to rally going into earnings, a couple of days before earnings, understandable, justified, because technically it is a descending wedge and it's, a bullish pattern. So I understand the breakout. Everyone's excited for earnings. Understandable. But I'm telling you right now, these numbers are going to be key, because this company needs to start bringing in revenue of this status to maintain its current market valuation. Because again, the company brought in $1.6 billion last year, and we're sitting with a market cap of $14 billion. And, it almost seems like the more they make, the more they lose. bringing in 1.66 billion for 22, losing 6.75 billion to make that 166 billion, right? So they're losing $4 for every dollar that they're making. That is not a recipe for success. However, if we go back here, we can see the profit margin has begun to slowly rise here on this revenue, but it did kind of plateau and flatten out here, 663 million, and then last quarter 661 million. So again, this is their breakout quarter, 955 million. If the company comes in light, then they should, in my opinion, keep the stock flat or potentially even keep it trending downward along this bottom trend line. If the company comes out, blows everyone's hair back, and let's just say they post like 985 million or 955 million estimates, then boom, that's going to be not only, again, this is what I talk about with the perfect storm when you look at stocks, right? You have a stock trending in this downward channel, building up into this long-term wedge, and it's a bullish pattern, and it's going to rally going into earnings and simultaneously break out of the descending wedge as it should, and then boom, earnings come in above estimates for the first time, really going back 3 or 4 quarters, and that's what I mean. Now all of a sudden the stock is kind of more fair valued, and it has more potential, right? Because now they're bringing in billions of dollars, and the market cap would be, 15, 16 billion on the pop or something. So that's what I mean. It would be more realistic. It would align more realistically. It would make more business sense if what I'm predicting happens. And then again, if the company comes in on 980 million, great breakout quarter, we're expecting bigger and better things the next couple of quarters and the next couple of years down the road. Yeah, phenomenal, fantastic. Pump it up all the way back up here to high 16, low 17s. Get it back to that top trend line, and have it potentially line up and break out here down the road going into next quarter's earnings, which would be mid-November, which would be like here, right? So that's what I'm saying. You could have like the breakout here, have it bounce on this, have it bounce and follow this top trend line, potentially a little breakout here going into earnings, and then again, if they come in above estimates, boom, then you can break out right there of this long-term descending wedge that we're in, right? Because if I take the auto off, look at that. This is just a long-term descending wedge. So that's why I'm saying the earnings, the numbers themselves, play a key factor. And we do have a situation lining up here, not only in the immediate short term with the inverted head and shoulders, you can see a little bit of a pop, but of course, more importantly, if we maintain this descending wedge pattern going into these earnings, and these earnings come in healthy, that's going to be the catalyst to really explode the stock. And again, that's mid-August. So if that doesn't happen, then we got to come out mid-November, which is like right here, and then boom, we're going to have to try again and see if the numbers come in to give us the pop. And then, of course, if we go out even further, that'll be mid-February, the next quarter's earnings, right? And now you can see the wedge tightening. So that's what I mean. It's going to eventually happen, in my opinion. However, if you come back all the way here to the next quarter, you can see now we're in mid-May of 24. You can see that the wedge has seriously tightened here. And I didn't want to go too far out, right? Because now we're talking mid-August of 24. It really shouldn't take them this long. But again, I mean, this is worst case scenario, obviously, for all of you long-term holders, if they bring the stock down here into the 8s and the 7s over the next, 12 months before the company really starts posting these robust revenue numbers and really justifies the breakout here to the upside. Because again, I've been saying from day one, the stock is overvalued. Overvalued, my man. And the only way you would disagree with me is if you own shares. Sorry to call you out. I call it like I see it. That's why clients appreciate it and respect it, man. So again, at the end of the day, the company right now, in my opinion, is overvalued here at 15. And as you see, when the stock came out, it was well over $100, and the company wasn't doing anything. Look, a couple of $1 million up at 100. All right, you know what I'm saying? 7 times, 8 times higher than where it's currently trading. So the company was just bringing in a couple of $1 million to start out, but the market cap was, 80 billion, 90 billion. This is what I'm saying. This is why there's easy money to make out here. You want to know why this immediately went into a downtrend? What is this? June of 22, November of 21. Okay, so this entire time here, the first 7 months that this company started trading and went public, it did nothing but drop down. And the reason why is because, again, like I always say, all of these newer companies are bringing in just a couple of million or potentially not even generating any revenue. And of course, they go with the highest range on the IPO stock price and they look for the highest valuation, and that's what happens. These companies come out with a market cap of 90 billion and they're not making any freaking money. So Wall Street, trust me when I tell you, they wait for that 30-day period to pass, and then usually options begin getting listed on the stock, and everyone and their brother jumps on board, buys long-term puts, hell, even short-term puts, because they know they're right. And then, of course, more importantly, they short the shares over the long term, and that's what I mean. They always end up making money hand over fist. So everyone, the younger investors, got all hype on this name. Oh, it's another EV IPO. I'm going to buy shares at IPO price, and it's going to be the next Tesla. It's going to be phenomenal. It's going to help me retire. No, it's not, because they massively overvalued themselves north of $100, $110 a share. And now, as you see here, mid-May of 22, literally 6 months after the IPO, you would have bought this stock at 100 and change, and now you're sitting here at sub $20. So again, you can try to chalk me up as like a pessimist or someone who just like hates the market or whatever. I call it like I see it, man. And we looked at a lot of other companies. You got your Safe Bulkers, you got your Daskis. We just looked at Peabody Energy, BTU. There's so many others. Fubo, right? Goodyear Tire. There are so many phenomenal companies that are trading nowhere near, in my opinion, where they should be. Yet a no-name, overvalued piece of shit like this comes out and valuates themselves well over $100 a share. Look at this, rallying up. Look at the high, 179.5. Now imagine you bought shares of this son of a bitch at $160, $170 a share, and then 6 months later you're down, 85%. Can you imagine? And you really thought you invested into the next Tesla. And even now, with the company bringing in, look at this, several $100 million finally, which should have been happening here. But again, I'm not trying to force an aneurysm on myself here. But again, you can see, even with all of this revenue coming in, hundreds of millions of dollars, what happened? The company continued to hit new 52-week lows and just slide into the gutter and completely take your life savings, everything down with it. That's why I tell you guys, don't always buy into the hype. Just because they mention something on Reddit doesn't mean it's a buy. Do your own due diligence. You're going to have to. Because again, if you miss something, or if you didn't even look at the market cap valuation, right, like I do, and you stepped in here at 100 something, and now you're freaking livid because you're down 80, 90%. Again, at the risk of being too forward, at the end of the day, you only have you to blame. Unless, of course, you're paying like a financial advisor to manage your account, and and they said, oh yeah, buy it, it's going to be good, and then obviously it shits the bed. Then obviously that person is solely to blame, believe it or not. However, you have to do your own due diligence, especially if you're investing and trading on your own. And that's why I say, you can call me a pessimist, tell me I'm talking a lot of smack about a lot of these companies, a lot of these EV companies, and the reason why is because it is easy pickings, baby. Shooting fish in a barrel, I promise you. The big boys on Wall Street, they woke up every day this entire time and just bought more long-term puts and shorted shares. I promise you. I promise you, I promise you, I promise you. Because you're basically telling me that the stock on paper that's probably only worth maybe a couple of $1 billion has a market cap of 90 billion. So what do they call that on Wall Street? They call that free money. That is free money. They just short the shit out of it, buy those long-term puts, and then go on about their lives because they know they're going to turn around and make ridiculous profits off of supposedly all of the younger, stupider money and the fools who buy into these hypes and just blindly buy shares of these stocks without doing their due diligence. But going off on a tangent here, so market cap still 14 billion, company brought in 600 million for this first quarter, below analyst expectations. Somehow, again, they keep missing on revenue, but they're coming in and losing less than analysts expect. But this is what's interesting here. First of all, for the rest of the year, look at this, 955 million we looked at for the next quarter, 1.25 billion, 1.22 billion, expecting the slight sell-off there. And if you add those up, you're looking at about 4 billion, right? See, as you see here, the estimates for 2023, about 4 billion. Still going to be losing over $5 a share on $4 billion. Now check this out. If we go all the way to 2026, I believe we looked at this last time, the company still be losing over $2 a share. Revenue estimates $16.5 billion. So from where we are now, last year, losing $6.34 a share on $1.66 billion. And if we 10x this number over only 4 years, mind you, up to $16.5 billion, guess what? We're still going to be losing over $2 a share. How the hell does that make sense? How the hell does that make sense? So revenue is going to 10x, but losses, you're only going to narrow losses by like 60 or 70%. Can you imagine? So what does that mean? The company has to bring in $40-50 billion in a year before they're profitable? I mean, what kind of investment is this? Right? That's why I'm saying. That's why the whole time, even a year ago when I first analyzed this stock, I was saying this stock should be a couple of dollars, man. And again, as we saw, it was 27.5, 28, and it went all the way down to 11.68 or whatever the hell the 52-week low was. And in my opinion, it shouldn't have stopped. It shouldn't have even bounced here. It should be riding this bottom trend line down into the low 11s and into the 10s, consistently making new lows. So if you were able to short shares at $27.5, $28 when you watch my video, and then you see the lows down there at $11.60 and change, even now at $14.87, you're up 50%. You shorted shares at $27.5, $28, you're buying them back at $14 and change. That's a win, baby. That is a win. And again, nothing is guaranteed. We never use the G word. There is nothing guaranteed in this life, in the market, in anything. However, something like this, that's what I'm saying. This is basically the closest thing to a guarantee you could have got. And that's why you guys, again, have to do your due diligence. You have to look at the numbers. And I still feel the company is overvalued. Again, expecting $4 billion for the year, excuse me. And they keep coming in light on revenue. And revenue is the sole driver. I mean, that's great that, they're bleeding less than everyone expected somehow on less revenue, right? I don't understand that. However, you're not doing as much business. You are not as popular. You are not bringing in as many sales as everyone thought you would. Look at that, missing by 60 million, 14 million. These are not small numbers, right? Think about how many cars you can buy with $14 million, $60 million, right? That's what I'm saying. That's what this company does, right? They sell cars. And just because they IPO'd as an EV company and they were tied to Amazon, everyone thought they were going to go to the moon. That's why they overvalued themselves, and that's why a lot of poor, uneducated investors stepped in and are probably getting their ass handed to them right now. No one is going to take care of you but you. And if you buy a company, again, bringing in $1 million, $50 million with a market cap of $70 billion, again, I'm sorry to beat you up because I'm sure you're very upset right now, but you have no one to blame but yourself. Shame on you. Shame on you. Again, this is why I make these videos, right? I'm currently not charging anyone for anything like that. I always said all I want you guys to do is like the videos and subscribe. Let me make the money from the YouTube ads, and then we can start doing small account trading challenges in there. I can get back into the short-term trading, increase my liquidity again. But let me make the money from those companies. Let me make the money from YouTube. I don't have to make the money from you guys. And again, unfortunately, it's been about a year since I started the channel. Still not monetized, only slightly halfway there with the subs. And again, I still say I am more right than I am wrong. And especially if I gave you these long-term investments, and that's what I'm saying. You had the knowledge and the wherewithal and the discipline to wait to see them work out and then take profits take profits accordingly, if you will. Again, 27.5, 28. Did it go up immediately after I said it should go down? Yeah. However, we are kind of seeing that happen with everything lately, if you kind of noticed, right? And then what happened, though? Again, it ended up coming to fruition, and that's what I'm saying. Now you turn around several months later after watching my video and taking my advice, and you're like, holy shit, the stock is sub 20, the stock is sub 17. Look, the stock's hitting new lows. It's at 1260 today. Holy shit, this guy was right. He just made me 55% long-term short, or my long-term puts are up hand over fist, right? This is what I'm saying. You have to understand how the market works, stock valuations. It can't just be guesswork. because I promise you that this, not to make assumptions, it's probably what you're mostly doing now, and you're probably incorrect more than you're correct. And again, people want to bash it because it's much slower and it's not as exciting, right? Trying to use like this Buffett method, bet against the stocks that are massively overvalued, that are doing very little business, don't have the numbers to support them, and invest into the companies long term that do have the numbers to back them up and support the valuations, and of course are trading at low PEs, but they're profitable, they're doing good business, they're, more than not meeting or beating earnings estimates as opposed to being inconsistent. You beat one, you miss one, you miss one, you beat one. Those are the companies you should invest into. And that's why if you look at companies like Fubo and SB and what was the other one? STEM, right? We were looking at STEM. I think it was down at like 370, 380 initially or something like that. I can't remember. And I looked at it before. Now it's over $5, right? SoundHound was up over 50% for us. We talked about that. Rolls-Royce, I mentioned. I recently did a video. Rolls-Royce was $1.20, $1.25 when the bull dropped. We looked at it a week or two ago. Stock was up to $1.90. Right? So, that's what I'm saying. Invest where you should invest. And if you don't know about the hot trending stock that everyone's talking about on Reddit, that's randomly trending on your screen and it had a 20-30% pop, listen, who cares? Who cares? Control the controllables, right? And that's the problem. Our positions may take a little bit longer, and then you'll see something pop 10-12%. You'll beat yourself up. You won't remain disciplined, and then you'll start looking for other stocks like that do have the potential to pop. And now guess what? Now you're gambling again. Be smart. Stay focused. That's what I always say. Stay disciplined. But again, Rivian, I'm glad the revenue's coming in. It's still not fair value, in my opinion. Should go lower. Here in the short term, again, inverse head and shoulders. You want to catch that pop. Again, make sure it confirms it and gets above that neckline and breaks out of the wedge and shows you that, the bullish run is going to happen. And then you can step in if you'd like and try to roll the dice with some short-term calls or short-term shares. But overall, again, long-term holders, this is going to be the big breakout, in my opinion, because if they can get up to this point where now they're generating $1 billion and change a quarter, now you're talking $4, $5, $6 billion a year in revenue, and now even $5 billion, looking at a market cap here at 14, 15 billion. Guess what? Now you're under 3 or a little over 3 times yearly revenue, and all of a sudden, the company looks more realistic. It's down here, it's down on earth. It's fair valued, and we can potentially be at the bottoms now, and long term, we can begin to bounce and rally off of these lows, and one day down the road, it'll get back to $40, $50, $60 a share. That's how it works. But I'm going to end it there. Actually, no. Let's go over to stock charts real quick. So we come over here to stock charts. We're looking at the daily. As you can see, 200-day moving average was up here at 32.35. Now it's down here at 23.36 because the stock was way too overflated. And, the MACD has been slowly rising here as of late, and the company recently broke up and got above this 50-day moving average. However, again, in my opinion, bouncing off of this high Bollinger Band, so probably is ready for a pullback. But you do have to keep an eye on that inverted head and shoulders because it could pop, break out, and go up before it does pull back. RSI was running up, slightly pulled back here, still over 61.5, not technically overbought, so we could still have a little bit of a pop, a little bit of a rally there. Looking on the weekly, RSI has been rising, but now it's pulled back a little bit. It's only sitting here at 40.5, right? So this, again, could just be the beginning. And this is why also the mid-Bollinger Band 1541 hit a high of 1566 and then rejected and pulled back and closed sub 15. So that's why the MACD has been rising and separating here. We just had the rejection off the mid-Bollinger Band. So that's why I'm saying, again, the inverted head and shoulders, as we see here, could potentially break the stock up to the high teens, maybe even 20. I don't know, because people love these EV stocks, so everyone will jump on board once it starts running. Definitely shouldn't get back to that moving average of 24.35, though, I'll tell you that damn much. But chances are we'll pull back and reject down to the bottom Bollinger Band, 1036. That, in my opinion, is where the stock should really be. So, again, short term, you could have a pop. Long term, I'm still betting against it, and I'm going to leave it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop down in the comment section. I'm usually very quick to reply. Thumbs up, like the video, share the video. Helps out the algorithm, helps me get more eyes on the channel. Subscribe to the channel. It means a lot to me watching the community grow, right? I want to get that ad money up so that I don't have to ask you guys for money. So tell your friends. Subscribe on every device if you have to. I don't care. But moving forward, like I always say, I understand that markets are rocky, trucks going by, markets are uncertain and volatile. So I want to wish everyone success. I hope everyone makes a couple of dollars. Thanks for stopping by. I'm going to catch you guys in the next video.